Right, welcome back to day 3 of Road to a Million. And of course, I mentioned in the last video that it was largely about the business plan, producing something early doors, something that we can try and abide to as much as possible, also update as we go along. In this video, I want to talk about the financial modeling, the structure and the infrastructure behind everything that will be within. So I didn't have a chance to fit it in that other video because I want to do the two as they were both done on the same day. But this video that I'm producing today, day 3, gives me the chance to produce that. And without further ado, let's get into it. So let's open up. You'll see I've been using Claude, and with the help of Claude, Sonnet 4.6. I was actually watching how rapidly and how exponentially AI had been growing because fortunately, whilst I've been recording this, I've been using Claude because I realized that Claude was better for what I needed. But within this period of using Claude, they produced Claude Sonnet 4.6, which I've realized now that it is amazing because how brilliantly it's built me this spreadsheet. And from my background and experience, I know how to use this spreadsheet. I don't know quite how to create it. I mean, I could get there, but it might take me a month. And this has been done within, produced within seconds and a day's worth of conversation. So let me show you what is in this. So this is the dashboard. You'll see, and if you've seen my last video, if not, I recommend going back, starting from the beginning because it's still early doors and you can follow through. So it's a drinks machine business, okay? So we operate on a franchise and a direct placement model. So you'll see here, look, machines in the estate, 5 which will be directly owned by myself in year 1. And you see the progression there as we move throughout the years. And you'll also see how we go from an all-encompassing directly owned share, well, not even a share, directly owned machines to the higher proportion, the higher ratio of franchise to direct machines that are owned by us as a company. Reason being lower operation costs for us in terms of time, energy, and money, and yet I still am able to receive lease payments, right, as well as supply margins, which you'll see further on throughout the schedule. So much like aircraft, which I managed previously in one of my jobs, you've got utilization, which in this case is average cups per machine. In the case of the modeling I was doing for aircraft, it was utilization of the aircraft. So was the aircraft on the ground? Was it receiving how many ticket sales was it getting? It's the exact equivalent, right? So you've got your gross margin, which is obviously before all of your deductions, earnings before income, tax, deductions, and amortization, I believe. And there's the margin. Now, this is brilliant because you'll see it starts out at 35% in year 1, goes up to 60% in year 5. Of course, this is speculative. This is pre-revenue right now, as it is in at the time of presenting this. But I've looked online and EBITDA margins of 10 to 20 is exceptional. So to have these margins is brilliant. Net profit, you can see there, we're making really, really healthy numbers. I'm conscious I'm on 4 minutes. I want to keep these videos brief. And as I say, not everything is presented as it is produced, but I want to keep things relatively in line, okay? So this was produced a day or two ago, along with the business plan, right, in the same day, but because they're such big documents and so important, they're being presented one by one because, as I say, 2 days ago, what's the difference? It's still a nearby time period, right? Closing cash balance, blah de blah, ROI, which is obviously important. Footfall orders. So I say we're a community project. I used to work for a company called Serve Legal, and we used to do audits, and we get paid per audits, which was essentially going into pubs, going to clubs, going to bars, and grassing, essentially. I'm not gonna lie. Stitches get stitches, I do know that. But we would go in, see if they would ID us, see if they were streaming football legally or racing or whatever it may be, and we'd write reports and feedback. I've got a similar mechanism in place for this. I want to give people opportunities to go to a place, go to a gym, go to a hospital, wherever it may be, and record the footfall, record how what amount of time are people spending in that place? Are vending machines already there? Are drinks machines already there? What is the circulation? What time is it getting really busy and what time is it much quieter, right? So there we have dashboard. Next, in some assumptions. So these blue cells are all editable. So you'll see we've got machine estates at the top throughout years 1 to 5, machine economics, cost assumptions. As I say, these will all be changed as and when I go through the process, right? But at the moment, this is purely planning stage, right? Monthly lease, you'll see here the money that will come in from franchisees. And overheads, you'll see they're quite negligible, other than drawings, which is obviously my wage that I give myself. And as I mentioned, we're a social enterprise, so 3%, which is actually a nice relative number, goes to funding projects. Okay, so doing good. That's the whole premise of the business. It's not simply a drinks machine. Okay, it has a bigger purpose. An audit a day rate, £8 a day, and MRs, so maintenance reserves. As I said, I worked in the aviation industry, taken the aspects from there and brought into this asset class, and it's similar. Okay, in that it accumulates and it pays for any maintenance reserves and operations of the asset. Profit and loss balance sheet, right? So you got revenue, cost of goods, operating costs, everything below the EBITDA, and the community impact. So you'll see there it's accumulating, it's cumulative, and you'll see it there, it goes up to cumulative community fund up to 65 grand in year 5. So that's a healthy amount of money in order to do projects, right? I would love to get someone on board in the future who is specifically tasked with dealing with the people. What do the people want to be involved in? What does that community want to be involved in? What projects can we operate? How can we contribute to ESG, right? All these things. Cash flow, you'll see there, A, operating cash flows, B, investing cash flows, C, financing cash flows, D, MR account, and net cash position. You'll see that's all done in the correct order and it's sequenced, and you'll see how healthy of a business this is, right? But the great thing is, it's more than just profit maximizing. Even though it is great profits, right? It's very much in the green. It gives us the opportunity to do them community funds without destabilizing ourselves. You'll see here asset classes. You've got direct machines, franchise machines. Guys, I'm being open here, very open here. I know at this point of the stage, at this point of the stage, at this point at this stage of the business, right? I know no one's gonna watch these videos, or I don't believe anyone will, right? Because it takes time to get traction. But I want to be open with you guys. I want you guys to see how we're operating. The utilization rates, of course, that is an approximation right now. Net profit per direct machine, equity per machine, you'll see there, and return metrics, capital and returns. So I'm being open because I know that I can put the infrastructure in place, I can use the logistics, I can help people, right? And it's a win-win-win. It's a flywheel, right? Everyone's happy. The consumer's happy because they get a refreshment. I'm happy because I make healthy margins, and the franchisees happy because they're not having to they're not having to worry or stress about anything, right? All they have to do is pay the monthly price, right? And everything's dealt with, essentially. Okay. As in, they don't have to have the capital up front. Yes, they will deal with the MRO, but the MRO, I have the contact. I give them the contact. Restocking is done in the location, okay, because that's what they pay the license fee for, partly. And so it's very much a low-touch business for a person to have. So everyone's happy, right? Everyone's happy. Locations. As you'll see here, breakdown, largely going to go for gym and leisure centres because it's a health drink primarily. Universities, great footfall. I went to university, I used the machines, there's low risk for the business, as you'll see. So we'll operate 25% of the estate there. Corporate and co-working spaces, great. Younger crowd, generally speaking. A lot of startups, a lot of founders, a lot of sometimes students. So great places. They may be better for the more Asian inspired drinks, perhaps. The market of that's more pleasurable drinks rather than the health oriented, they could operate well there. Care homes, again, we go back to health drinks and other. So there we have location, guys. I'm conscious of time. MRO, as I've mentioned, maintenance, reserves, and operations. I'm operating a physical machine here. It's infrastructure. So how do we balance out the reserves? Well, how do we balance out the maintenance? Well, we have monthly payments of reserves, and that pays for maintenance on the estate of machines, and that's how that's operated, guys. You'll see reserve versus actual. It's recorded as roughly the same, right? So where it's in brackets, it's negative. Here we have positive, but you'll see that this number essentially is this number, right? Very much so. They're very close in the numbers there. So apologies, guys. I hope you like the beard. If we're going to scenarios, oh, frig. So we've got our markets. Of course, it's best to model a conservative case, a base case, and an aggressive case, also known as a bear case, a bear case, a base case, and a bull case. Say that after a few pints. Now we've got the EO impact. Of course, we're a community project, so this is just for my tracking, for this case of tracking and for well-being. I'm going to wrap up this video, guys. I'm proud of myself for getting it done. I hope that was beneficial. I hope you see and you follow through. Follow through. I hope you got value, and I hope you continue watching the videos and that you are somewhat inspired or that you just enjoy following the journey. Peace.